Hello and welcome to our cost and management accounting sessions. In this session we will try to understand the cost, and we know that unlike financial accounting, the term cost is being used from a managerial perspective rather than the statutory requirements. So in costing there is a possibility of defining and calculating cost based on the managerial requirements. So in this session we will try to see four different types of cost: the prime cost, conversion cost, product cost, and the total cost. Along with this, we will also try to see how different is this cost from the expenses that are generally shown in the income statement. So these term cost and the expenses, at a prima facie we can say that cost is the summation of expenses, but the actual composition of the cost to a large extent depends on the purpose for which we are determining the cost. So for example, if this is the financial information relating to the expenses are given, and with this information we can find different types of cost. For example, if we say prime cost, the prime cost is the summation of the direct material and the direct overhead. But this concept of prime cost normally we will not see in the financial accounting. That is mostly a cost accounting term. Similarly, the conversion cost, and this conversion cost is also being used in the accounting standards, but this conversion cost is the expenses required to convert the material into product. So therefore it includes the direct material and manufacturing overheads. So the conversion cost is the expenses required to convert the material into the final product. And the accounting standard also says that the inventory should be valued at the purchase price plus the conversion cost. We'll see the total cost. The total cost is or we call the product cost, is the summation of the direct material, direct overhead, and the direct material, direct labor, and the manufacturing overheads. So normally the cost at which the product is shown for various purposes, for pricing, maybe for some managerial decision, will show it as a direct material, direct labor, and overheads, manufacturing overhead. We can see that we are not including SGAs, selling, general and admin overheads, in the product cost. And the total cost, sometime you may come across the word total cost, and the total cost is to a large extent depends on for what purpose we are. If it is for the costing records, then also we include material, labor, manufacturing overheads, and selling and general and admin overheads. But you can see what is not included till now. We have not included the purchase of plant and equipment, because that is not an expense but a capex. Loss on sale of share, it is not an operating cost, so the concept of cost will not include the loss on sale of shares, on loss of or profit on the sale of fixed assets, or any purchase and sale of investments. Similarly, currency fluctuation losses and gains are also not included in this cost concept. Interest is a finance cost, and normally cost accounting ignores this and does not make it a part of the cost at all. Dividend distribution as such is not an expense but is a distribution of profit, so it never forms a part of the cost. So the cost composition to a large extent depends on the purpose for which we determine the cost. Now let us see how this cost differs from the expenses that we normally see in the financial accounting purposes. Expenses in the financial accounting purpose will be 171,000. What is that consist of? From this information, direct material, direct labor, manufacturing overhead, selling and general and admin overheads, the loss on sale of shares, currency fluctuation losses, interest. All these are shown on the income side of the income statement or profit and loss account. Here, observe that we don't make a distinction between direct and indirect, between fixed and variable, between product cost, conversion cost, or SGA and manufacturing overhead. All expenses are shown together. And because for the purpose of financial accounting is to find profit, and profit is equal to expenses minus the or the sales minus the expenses, and here the sales is 250 and expenses. Just to summarize, therefore, the concept of the cost, unlike the expenses in the financial accounting, is a function of the managerial requirement, whereas the expense in the income statement to a large extent is dictated by the generally accepted accounting principles. Number one. Number two, the purpose of determining the cost will decide the composition of cost. For fixing price, for inventory valuation, for making decisions like make or buy, will have different compositions of cost. Whereas in the income statement, we put all expenses because the purpose is to find profit for a particular period. So financial accounting expense is not equal to the expenses or not equal to the cost you generally see in the cost records. Thank you very much.